Geraldine Lamb, Capital Markets and Investment Banking Editor at The Banker magazine, in discussion with Brian Caplen, Editor of The Banker. So, Brian, how significant do you think the crisis is, and what impact will it have on banking long term?
Well, clearly it's the most significant financial crisis we've had for 80 years. And it's quite obvious that governments and regulators, and indeed banks themselves, are feeling their way as to the outcomes. I mean, we've seen people learning on the job, quite frankly. We saw the British government really struggling when it came to bailing out Northern Rock in the UK. But by the time it got down to Bradford and Bingley more recently, they'd obviously learnt quite a few things about how to bail out a bank. And I think we're seeing the same thing in Europe. We had the meeting of the heads of state in Paris in early October, when they really couldn't agree about anything very much. But I suspect as going forward, and especially if the crisis deepens, they'll actually be coming back together and hammering out a more concrete kind of EU-wide plan. And the same thing in the States, where we've seen governments taking their sort of ad hoc approach to bailouts, and we've seen the different banks that have got into trouble and different institutions that have got into trouble bail out in different ways. But now we've actually hammered out a bailout plan, and that's the sort of template for a more uniform approach. But then going forward, I think, once the crisis is resolved, this is going to be, when we look back on it, this will actually be a sort of a real break point in banking. And I think we'll see new forms of regulation coming up. I mean, I definitely think that politicians, are now have banking on their radar screens, and they will be looking at ways that they can regulate the industry better in the future. Obviously, the danger is that they get too carried away, and we have a repeat of the post-tech crisis, where we had the Sarbanes-Oxley legislation, which was considered to be too onerous. But definitely, I think everything is going to be rethought. Basel II is going to be rethought, and probably the role of the IMF is going to be rethought. The whole sort of approach to EU-wide legislation is going to be rethought. So I think we're starting to get into a new era for banking.
So what shape do you think new regulation will take? Do you think that the whole principles-based approach that was mooted in the UK, for example, has been discredited? Do you think it's going to be a much more sort of dogmatic, more prescriptive form of regulation?
No, I don't actually think that when people look at things, that the crux of the matter is the difference between principles-based regulation as we have in the UK and Europe, and rules-based regulation as you've had in the United States. Because as you've seen, both systems have managed to get themselves into trouble. But I think where we are going to see changes is there's a change in thinking about what regulators will say to banks and financial institutions. So recently, the Banker magazine interviewed the chief executive of the Financial Services Authority in the UK. And during that meeting, we asked him about what were the lessons to be learned from Northern Rock. And his response was, well, Northern Rock was definitely, we got it wrong because we weren't monitoring it properly. But at that stage, he said, even if we had been monitoring it correctly, what would we have done? We would not have gone and told Northern Rock that we didn't like their funding model. We would only told them that, are you sure you've got your risk management practices in place and have you ticked all the boxes? But then just a few days ago, Lord Turner, Adair Turner, who's now the chairman of the Financial Services Authority, appeared to be rethinking completely the approach to regulation in the UK. And he has been saying, on interviews he's given to the BBC in London, that now he thinks that it is the role of regulators to go out and tell banks, you can fund yourself this way. So you have to limit your capital markets funding against your depositors' funding, or you have to have diversity on your asset book in a way that we haven't seen before, or shareholders' returns are going to be capped, or compensation, or whatever it is. I think we're going to see regulators being much more prescriptive generally about the business model. Whether it's done by principles regulation or rules-based regulation, I don't think is really the issue.
So you said earlier on that you think there is always the risk, as we had before when the tech bubble burst, that politicians can go too far or they can get it wrong. So what do you think would be a mistake this time around? Where do you think regulations could go wrong?
Well, I think if we got into a stage where we stopped investment banks being innovative or banking being innovative, it has been an extremely entrepreneurial and dynamic industry over the past 15 and 20 years, and clearly mistakes have been made. But it's a shame that the mistakes that have been made in one part of the business, which is basically the structured products part of the business, would be then used as a reason for regulators to close down other parts of the business. Because even now, during the crisis, we're seeing all kinds of areas of investment banking which are contributing to economic development, such as in the environmental area in terms of emissions trading and climate change and sustainability, and other kinds of social problems that they're trying to solve, such as the problem of funding pensions for ageing populations. Now, these are all areas where investment banking can make a positive contribution, and it would be a great shame if in regulating the structured products area, which has been the problem, we then close down the other areas.
I mean, I suppose the biggest difficulty for the banks is to manage, is to create a balance, so to balance creativity with prudence, and that would imply that actually it's all about management. So what changes can be made at the sort of management level? I mean, should we put greater onus on boards? Do we revamp the whole board structure? Do we revamp management structures? Is that how they keep the innovation but stop the
I think that's
madness?
definitely one area that's going to be looked at. And already, different regulators have made it clear that anyone who sits on a board, on a bank board, now has to have proper banking qualifications and expertise, which certainly hasn't been the case in the past. If you look at the boards currently of the major international banks, you'll find all kinds of people there who've never had any more involvement with the bank except for making the occasional deposit. And the same thing with relationships between the chairman and the CEO, which has always been a bone of contention. I think those roles will be much more clearly defined. And already there's signs that in the UK, the Financial Services Authority now is asking for the approvals process for non-executive directors, which they've always had some say-so in this, but they're asking for it to be made much more formal, and they're actually going through and checking, what are the qualifications for this person to serve on a bank's board. So I definitely think that's one area that's going to be tightened up.
And what about, do you think there's been any kind of rupture of some of the fundamental relationships that have underpinned banking? So, for example, between the banks and the rating agencies, it now looks as if the regulators have got the rating agencies directly in their sights. So do you think there's going to be a massive change, fundamental rift in the relationship? What's going to happen there?
Yeah, already. The EU Commissioner for the Single Market said very recently that, came out with a new directive very recently, which was going to control the rating agencies' involvement in the whole process. And the key conflict of interest that he's identified is the conflict between working for the issuer as well as the investor. And I think that's the area that's really going to be looked at. So in future, banks as issuers are going to be required to do their own due diligence, and so are investors, And the credit rating agencies may have a role in giving an opinion, but the key is that their opinion should not override internal due diligence procedures.
You mentioned just now that about due diligence in relationship to investors. Investors seem to have sort of held up their hands recently as if none of this issue is anything to do with them, and yet they are the shareholders in firms. They are the shareholders of banks, and they have pushed banks in many ways in demand for higher return on equity. They have pushed banks towards doing more risky business. What's your feeling about what's the relationship with the investors will be?
That's exactly correct. Investors seem to get off scot-free every time we have a crisis like this, and their actions are critical to the process. But the only way the regulator could influence the investors would be either things like procedures in terms of rating agencies, or would they go so far, now they've become interested in business models, in actually capping returns on equity in banks, and saying that actually 15% is all we're comfortable with, and we don't want you to go for 25 or 30% because it means you're taking on extra risk. These are all areas that are going to be discussed now, and we'll wait for the outcomes.
So finally, do you think that politicians and regulators have responded well to this crisis?
I think that there have been examples of good responses and negative responses. I think in terms of some of the individual bailouts and the speed that we've seen the Federal Reserve move in the States and also the Treasury in the UK have been laudable, and it's clear that they've had to kind of think it up as they're going along. I think that's understandable in a crisis. But I think the big failure has been amongst European Union governments, or governments generally, to come up with some kind of coordinated response. And clearly, this is the first crisis of globalization, and one needs a globalized response, and we don't have that.